market not open today, and we'll convene again on Tuesday morning. Access to this video is for educational informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment security transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We're not a service that tells you what to trade. We're not implying or guaranteeing any profit, and as always, do not trade with money that you cannot afford to lose. And with that, we're off and running. What happened last week? Let's take a look at the indexes and see exactly what they did as far as their moves for the week. As we can see, looking at the S&P, looking at the Dow, looking at the Russell, and looking at the NASDAQ, we see that for the week, the percentage change was basically flat. And so what we looked at last week was a consolidation week in an uptrend. See that our moves for the year certainly are unsustainable, as we're approximately 6 weeks into the overall year. And we see that moves of anywhere from 7 to almost 9% in that length of time is not sustainable, and we will have pullbacks. The question is when. Well, basically, you can pretty well consider that we're headed for those previous all-time highs in the Dow and maybe in the S&P also. So for the week, we see changes with very, very little magnitude in our moves, and basically had a flat week, basically ended up where we started. Looking at the next week, what kind of economic announcements do we have? Well, today, President's Day. All markets are closed in honor of our presidents. Tuesday, we see that we have very little economic announcements coming up. Housing market coming up at 10 o'clock. Then looking at Wednesday, we see that we have another housing starts in the report coming out. PPI coming out on Wednesday, certainly capable of moving the market, which takes place at 8:30 before the market opens. And then we come into the CPI. The Consumer Price Index comes out on Thursday morning. Our normal morning, Thursday morning jobless claims, which tells us about the previous week and what the employment numbers are. We got PMI coming out before the market opens, and then again, as we continue that theme of housing, we got existing home sales coming out on Thursday at 10, Philly Fed coming out at 10 o'clock, and we got economic leading indicators. So quite a few announcements on Thursday, certainly capable of moving the market. On Friday, you see that we have absolutely nothing in this holiday shortened week of trading. But also remember, anytime we have a holiday shortened week and we have Monday off, that gives us an extra day of theta burn for the weekend. So it's like free money for those of you that know how to make money as the market is closed. If you do not know how to do that, contact Options University. Will be happy to teach you how to do that. Looking at the SPX for the week, we see that overall our trend is up. We've been continuing straight on up since we had the solution to the, well, whatever they want to call it, solution to the fiscal cliff. Notice that we're following this trend line straight on up with at the top of the Bollinger Band. No real pullback since the fiscal cliff had its solution right there at the beginning of the year, and we see that we've had a long overbought situation in the market. It will pull back, but obviously they feel they're a little behind and they're catching up on some of their positions. We can expect a pullback at least to the 30-day and potentially to the 50-day moving average when it finally does. But meanwhile, we are in an uptrend and an uptrending market with a consolidation for the week. Let's take a little closer look at the week by looking at a 1-month chart where we see that we had very narrow trading range for the entire week. There's our 5 days of the week right there. And we see that basically the market would end just about where it opened each and every day as the week went on, as we had these very small net trading ranges for the day as the market went absolutely nowhere. Let's see what the Dow did during this time. Looking at the Dow, we see that the Dow also had been consolidating a while. Dow is sitting right below 14,000 as we go into this new week. And we see that if it breaks out, it's got a bit of a move to break out. It's only a couple hundred points away from its previous high as we see the Dow leading the market up. And this week, what did we do? Consolidated, very much looking like the S&P. The NASDAQ, our laggard index, because of course Applenomics is no longer having its big effect on the market. And we see that if we look at the previous week, we see that we had basically a sideways movement waiting for the Dow to make its move to break up into newer highs. And you can expect when the Dow and the S&P finally make that break up, we may see the NASDAQ move a little bit higher, but nowhere near its previous all-time highs. NASDAQ isn't going to get there at this point. Looking at the Russell 2000, we see the market which showed us the greatest strength since the beginning of the year as it continues its upward trend, just climbing. And remember, this will continue to do this until it stops. So will it stop? Of course it will. Will be some kind of news? Well, remember, March 1st, we have again the sequestration approaching, where we're going to have these automatic cutbacks if Congress doesn't do something to work on the debt limit. And we'll see exactly how that happens and when it happens. And that could have an effect. That could be what pulls the market back so that we have a more normal market. Looking at the VIX, well, as the market's going up, we expect the VIX go down. What kind of fear is there in the market? Well, looking at the VIX, we see that we're basically at very, very lows below that 15 level. And in fact, we're down at 12.5. 1250, so very, very low VIX. And you notice when you are selling or buying, there's not a lot of volatility in your options, and so it has an effect on how much risk we have in our trades. However, the risk doesn't change until the fear in the market changes, which will provide greater volatility at some point. Looking at the bond market, what did our TLT do for the week? Well, it went basically sideways, certainly in a downtrend, as the bonds have been following that what we would call normal trend as the bonds go down as the market goes up. So usually we have that inverse relationship between the two. Let's take a look next at our ETF for financials. And looking at our financials, we're going to take a look at XLF, our ETF for the financial market, and notice it's continuously upswing as it continues in this long-term uptrend as the financials try to beat their way back from that major recession that we had, and our banks get healthier and healthier with any kind of luck. Next, let's take a look at oil. Notice that gas has certainly been shooting up here in Florida. Let's find out what oil is doing by looking at USO, and we see that, it's been going sideways, and the fuel prices seem to have been going up at the gas pumps. Kind of interesting as we see oil going basically nowhere. So we're at some highs, but doesn't give us a good indication on what's happening with gas. But we see that we're kind of in a trading range, and we'll see whether we break one way or the other. Oil trying to get in that positive move as we see it after the first of the year began to take off and continue with the overall market. Big pullback on Friday as we saw a large trading range for the day in oil. All right, where's that safe haven that people like to go? Let's look at GLD, our ETF for gold, and we see that not a lot of fear is look at that drop down as gold is not any big move as the market continues up. We'll see this spike back up as we see if we see some fear come into the market, as it gives them that safe haven where they don't have to have the same fear that they do when the market is headed down. And finally, let's take a look and see what kind of volume we had for the week as we look at the spider. And we see that, wow, look at Friday. Big volume, really went absolutely nowhere, but certainly had a volume spike on Friday. All right, well, what will the next week have to provide for us? Well, we're going to take a look at our stocks to watch, but overall, we can say we are in an uptrend. And for those of you that are gold members, hang around and we'll go through some of these charts, see what they did during this previously flat week, and see where we expect things to go as the week goes on. It was an interesting week in the market, and the week could provide, and this week could provide an interesting move as we have plenty of announcements coming in as we approach March 1st with the sequestration. So, for those of you that are gold members, we'll continue with our list of stocks to watch. For more videos from Options University, go to www.optionsuniversity.com/free gold. Ladies and gentlemen, thank you so much for being here. This is Butch Shorrock, Options University. Gold members, hang around. We'll continue on. It's Monday, February 18th, 2013, a 4-day trading week, as Monday is our day off for President's Day.